Several participants viewed an MEP as a useful initial option to address a future downturn in which the committee judged that it needed to employ balance sheet actions to provide appropriate policy accommodation.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and a quick video about what the Fed might do next. It's interesting because I was looking through the minutes from their last meeting, which was at the beginning of May, so just about a month ago. And something interesting they put in here, I didn't hear anywhere in the mainstream media mention or elsewhere, but the staff provided estimates of the capacity that the committee would have under each scenario to provide economic stimulus through a maturity extension program, which they call MEP. If you scroll down here a little farther, in their discussion of a shorter maturity portfolio, many participants noted the advantage of increased capacity for the Federal Reserve to conduct an MEP, which could be helpful in providing policy accommodation in a future economic downturn, given the secular decline in neutral real interest rates, and the associated reduced scope for lowering the federal funds rate in response to negative economic shocks. Several participants viewed an MEP as a useful initial option to address a future downturn in which the committee judged that it needed to employ balance sheet actions to provide appropriate policy accommodation. And then here we go. Participants acknowledged the staff analysis suggesting that creating space to conduct an MEP by moving to a shorter maturity portfolio composition could boost term premiums and result in a lower path for the federal funds rate. So what does all of that legal Fed speak actually mean? I would say just keep your eyes and ears open for an MEP or maturity extension program. I mean, we had somehow printing the last round of money was called quantitative easing. And I do find this interesting here. So again, also interesting that they're talking about negative economic shocks or a downturn. Again, if the economy is as strong as we are told, why the need to continue printing money, not reducing the balance sheet yet? In either case, thought that was worth keeping an eye on. So hit that subscribe button, and I will see you again soon.
The land of Arcadia.